Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. I'm not going to talk about Forex in this video. I'm going to talk about Apple stock. And I talk about it from a technical perspective. We know that the Worldwide Developers Conference came and went this week, and the market was, and the traders and the analysts were impressed with what they had to say about the AI initiative for Apple, for their products in particular. And it was a step above what we've been seeing in the AI front. And as a result, we saw the stock price of Apple move sharply to the upside. I'm going to talk about what next from a technical perspective. That is, what are the risks of that move to the upside, of that break to the upside? Where would the bias turn from more bullish to more bearish? That might have you thinking about getting out of this stock. Otherwise, the price momentum is still to the upside. The trend to the upside is still intact. And we'll talk all about that in this video. So let's get started. First of all, the thing to understand about the Apple stock is between these two yellow areas right through here. The bottom yellow area represents the floor that has been in place going all the way back to the month of April 2023. That's a long time ago. At that floor, we initially started with the price trying to figure out what which way the market was going to go. I finally found support buyers here and moved to the upside. Then we came back down, and we came back down to that floor, and we found support against that floor here. We found support against this floor here. Each of the time the market hit the low, the price moved higher off of that level. Now, on the top side, this yellow area was defined by this swing high, and when we hit that, we moved to the downside, and then we came right up to that area again and found willing sellers against the level again. So what you see here is a sawtooth pattern in a defined trading range. That trading range went from $165 to $200, and we moved up and down, up and down, up and down, going all the way back to April of 2022. And then, lo and behold, what we have this week, we had the Worldwide Developers Conference. And initially, the price moved lower on the day, and that moved to the downside. I'm getting rid of all these arrows right here. The initial move to the downside after the Worldwide Developers Conference day was to this blue line. This blue line represents a 100-hour moving average, and you can go back in time and look at the last two other times that the price came down to that 100-hour moving average. And what do? We found support buyers against that level. So sellers on the Worldwide Development Conference day came down, tested the 100-hour moving average, and bought against that level. The next trading day, the market gapped higher. We moved above the swing area through here near the $200 level, and it was a breakout. It was an official breakout. We saw increased volume. We saw increased momentum to the upside. We saw the price trend all the way up to the $220 range, $20.01 in the course of a couple trading days up through the top here. And then we started to see a corrective move to the downside. And the question becomes, what now? Did we reach the peak in this stock? Where can I buy the stock on a dip? Where is my risk? What would turn this bias upside down and turn the bias back to the downside from a technical perspective? And if you take a look at the stock, and we take a closer look at the Fibonacci retracement of this last move to the upside, this is the last trend move to the upside from the low right after the developers conference to the high price that we saw a few days ago. The 38.2 to 50% retracement of that move comes in right at this area right through here. I'm going to take this out. I'm going to shade it in here. It's this area right through here. This area between $206 and $209.55. That represents what I call the correction zone, the area where after a trend type move, you'd want to see the buyers come in against the correction zone right through here. If you go back below the 50% retracement, they've retraced more than 50% of that trend-like move. That doesn't tell me that it is a true trend move. Trend moves tend to go fast directional and large and further than what traders think. And if you start to correct below the 50% retracement, it's not moving higher in a fast and directional move and going further than what traders think. What you'd want to see is the price come down into this, toward this 38.2% retracement, maybe here, and then bounce back and start to move back to the upside and then extend above the previous high. That is a definition of more of a trend market. A market that's fast directional tends to go further than what traders think. So this area right here is going to be the first level of support. As long as the price can hold that level, the trend remains in play. We'd be happy to see the price move higher off of that level. The second area, if we do break below the 50% retracement, because things happen, then I would expect further selling back down toward our old start point right here. That start point around the $200 level, again, had the ceiling levels in place here before we broke to the upside. But also at this area right through here is the 38.2% retracement of this move to the upside. And when you take a picture of a longer term move to the upside, what you want to see is buyers running in against that 38.2% retracement. The fact that it's also against the old ceiling, the fact that the 100-hour moving average is also near that level, gives its level even more importance going forward. So with the price currently trading at around $212.36 to be exact. If we go down to $209 to $206, I'm still okay with this trend type move. I still think that the buyers are in firm control, that this is a good level for you to get into the stock of Apple to look for the next move to the upside. Conversely, if it were to move below that level, I lose some of my bullish bias from the trend type perspective, from this trend type perspective, but I don't lose perspective from the longer term trend, which is from this low to this high right here. I start to lose my faith when the price starts to go below the $200 dollar level, where this old ceiling level is, where it starts to move below the 100-hour moving average, where this blue line is located, and when it starts to move below the 38.2% retracement of the move up from that low. All those things would turn my the technical bias back to the downside in the Apple stock. So know that the 200 level, 198-ish type level is a key support. Know that close support comes in around the $206 to $209 level. Stay above those levels, and things are still to the upside for Apple stock. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.